Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. So let's see what is going on currently on the euro currency. Well, in previous researches we have said that since market had overbought and has hit the 1618 extension of the initial ABCD pattern, market could show the pullback down. But unfortunately on the intraday charts, on the daily time frame, we have no patterns just yet that could tell us how deep this retracement could be. And that's why we have to use some other tools, as for instance harmonic swings, to estimate how deep this move could happen in reality. Well, the harmonic swings show us different ranges to the downside. When we've spoken about this potential retracement after the oversold, it has pointed on the weekly pivot point, but as we haven't got this sideways action on the Monday, but market has shown the real plunge down, but this candle is creating the bearish solid engulfing pattern. We said no, probably we won't get this such sort, and maybe we could get this one when the market moves right from the overbought to oversold. I do not have this on the chart on this indicator, but we have discussed this yesterday, and that retracement points on the deeper move to the confluence support on the daily time frame, 134.35 area approximately. But what we see now, market has retested the previous swing high that has been broken on the weekly time frames, 134.86, that we have discussed million of times already, retested it and returned right back up. Also, take a look that this green line is the weekly pivot support one. And we know the market stands in the long-term bull trend. Until trend holds, the weekly pivot support one should hold retracement on the daily time frame. That has happened. Now more. Now we have the confirmed bullish pattern. That is the stop grabber. And this pattern tells us that if it will work, the minimum target of this move will be the taking out of that highs, the previous swing high. We know that the target of the weekly pattern ABCD pattern stands somewhere around 137.80, 134 area, and that could be the signal of the continuation to the upside. What risk do we have now? The short-term risk is the market will take it out of that low. If this will happen, we could get greater move to the downside according to these harmonic swings, or even slightly lower, right to the upward border of this consolidation. That will be not the pretty issue for bullish development. And I tell you what, that retracement is too small, that retracement is too big. I'll tell you that now we have this swing to the downside almost equals to that swing. That is some sort of the middle retracement between that one and this one. And market has shown the pullback the same distance as this retracement stands. So this could be that we accomplished the harmonic swings down, but not this one and that one, but this one. And market probably could be ready for the upward continuation. So what we have to do right now? Well, we have bullish trend on the daily time frame. We have the bullish pattern on the daily time frame right at the support. So we now have no reasons to enter on the short side of the market. Market not at oversold, at overbought. In fact, it has shown the retracement right back and correct the overbought condition. So pure technically, we have to search for the possibility to enter on the long side of the market. Our risk point is this low. So on the 4-hour time frame, you will see this clear. that could be why this is the risk. This is the law of the stop grabber pattern. Stop grabber pattern should be treated as the failure if market will take out this low. In this case, we could get risk of the downward move, for instance, from that A, B, C top pattern that has even the minor target, the 618 extension, lower than this low. So if market will continue move to the downside, this low will not hold. The ABCD target stands even lower than the confluence support on the daily time frame, somewhere around 33.75, 33.80, or you could count it by yourself and draw this ABCD pattern to the downside. Now we have the 4-hour time frame that has turned to the bullish side as well. This is nice angle of crossing, it's very fast recovery, but now market stands at the 50% resistance of that swing to the downside. Yesterday we have discussed this. Probably this swing could be nice opportunity, nice context for the Jordan directional pattern, for instance for the double repo, if it will reach the confluence support area. But that has not happened. Instead of that, market has shown the return right back from the previous swing high and weekly pivot support 1. That is also the support, but not the from the Fibonacci framework. What we see counts on above the 3x3. 1, 2, 3, 4, 5 clauses. This is a bit much for the bread and butter trade. This pattern in fact could work and could reach the target, since the 50% resistance is very common level on the euro currency that where the bread and butters could start. Probably we could treat this pattern as the lookalike, because although this return looks a bit tremendous, it's a bit too extended for that short swing to the downside. But take in account this fast reversal. If it will be gradual reversal, then probably market could show some lower fib level. But this is really a fast return. We will not trade, I suppose, this pattern, but we should take it in consideration. So if we would like to enter on the long side of the market, take a look at the hourly time frame. We see the trend has turned bearish here, so we could get the retracement right inside of the body of the daily stop grabber. That is triggered by the, if we could call it, bread and butter lookalike pattern. Since this thrust was not bad to the downside, I prefer to use some lower level to watch for entry point on the long side of the market. This will give us two advantages. First of all, we will be ready for the move by the bread and butter that in fact could reach the target, and its target should be around 135.11 area, 618 support of that swing. This is my minimum target of the bread and butter. And the second, it will give us the better point to entry, since our risk will be much smaller, so that's, but will be about 60 pips for the daily entry. That's not big risk for the trading on the daily time frame, you know, especially if the target will be around 137.90, 137.80 area. So very good risk reward ratio. So we just have to take into consideration the potential bread and butter lookalike pattern, and that market really, based on it, could move lower, could show the deeper retracement in the body of the stop grabber pattern. That's why we have to mostly look for confluence support on the 4-hour time frames around 135.38 area, or even lower level 135.11 is the potential levels for entry. If market will fail there when taking out this low, continue move lower, then probably it's a pity to say, but this probably could lead to this development to the downside, either to the 618 right to the 134.34 area, or slightly lower. Maybe market could form some sort of the butterfly here, the touching of this level and completing this ABCD pattern. Who knows? That also could happen. Currently we don't know that. Our context currently is bullish, since we have bullish trend on the 4-hour time frame, on the daily time frame. On the daily time frame we have this bounce right back up from the weekly pivot support 1. I beg your pardon. And finally we have the bullish stop grabber. So currently I do not see any reasons to enter on the short side of the market. If market will fail there, yes, then probably we should wait for some deeper retracement because the uncompleted weekly ABCD pattern is a really significant stimulus for the market to proceed high. This market very rare leaves behind the significant targets, especially when the distance to them is not very large from the weekly point of view. So that is our current thought on the euro currency. Keep an eye on these levels that we have discussed, and probably we could try to deal with this tab grabber. I think that this relatively reasonable idea, so we could try to trade it. If market will fail there, well, we will wait for further development. Our task right now is to get as lower entry point as possible, is more clearer to the stop grabbers and validation point right at this low.